Hey everybody, Ashley Garner here with ABG Multifamily. So recently I analyzed an apartment community here in North Carolina to buy. And it reminded me of one of the most important lessons in real estate investing. So here's the deal. The property sold in 2019 for about $7 million. Just 3 years after that, in 2022, it sold again for around $12 million. And that was as a part of a larger portfolio transaction. And that was during one of the hottest real estate markets we've ever seen. So the owner who sold in 2022 made around $5 million in just 3 years. Not too shabby, right? But fast forward to today, 4 years later, the people who bought it in 2022, now they're dealing with a property that they're trying to sell. It appears to be struggling. Their occupancy is below where the market should be. The physical condition has deteriorated. It appears that the owner's debt is maturing or coming due soon that they're going to have to pay off. So based on everything that I've seen, they're facing some pretty difficult decisions. Now, don't get me wrong. I'm not criticizing another owner. I would never do that. In fact, I feel for them. I empathize with them. I've been in tight spots before, and I don't want to be there again. Because this can happen to anybody, to any investor who allows the market excitement to replace disciplined underwriting. See, when interest rates were exceptionally low a few years ago, it was easy to believe that they'd stay low and that rents would keep rising and that cap rates would stay low so that prices would stay high and that refinancing something would always be available. But guess what? Markets change, and today the opposite conditions prevail. Higher interest rates, increasing expenses, flat rents. And that's exactly why here at ABG, we underwrite every acquisition based on today's numbers. Not what we think it'll do tomorrow, not what we hope it will do tomorrow. If a property doesn't produce acceptable returns with today's financing and today's conditions, we just don't buy it. If interest rates come down later, great. If rents exceed our expectations, even better. But that's all upside, and it's never a part of our investment thesis. So my takeaway this week is simple. Real estate rewards disciplined investors. I know I'm probably a broken record with that one. The goal is not to buy the most exciting deal. The goal is to buy the deal that still works when the market doesn't. I'm Ashley Garner with ABG Multifamily. We make real estate easy for you. Have a great week.